Welcome to Realty Real Talk. I am one of the hosts, Ashley Borney, and here's my co-host.
I am Deanne Roundy, and we are really excited to have Brian Case with us today, agent with Coldwell Banker NHS. We've got a great topic today, which I know is on a lot of people's mind, which is interest rates.
So, yes.
Yeah.
Yeah, mortgage interest rates. I mean, it's been changing here over the last year, 18 months probably, but I think they've kind of gotten into at least manageable. It's not fluctuating as fast as it is or has been over that. And I think that the good thing is that not only our mortgage lenders that we partner with and our clients trust and go to have a better grip on what's going on, but the public in general has a better grip of what's going on. Mortgage rates have been a topic that for centuries, right? How much can someone afford purchasing a home? I've been saying that this ever since they started creeping up was that they will eventually, yes, people will hold off on buying homes for a little bit, depending on what their situation is, but there's still going to be people needing to move. They're going to need to sell, they're going to need to buy, and the mortgage rates will eventually equalize, and they've been hovering around the same right now. Really approved or not approved, but really qualified buyers still can get a pretty good rate. If you're not, there are actually programs coming out now, from what I understand, where they're offering a little lower deposits or down payments. They're offering some, especially on the VA side, they're really helping our veterans out or our active military out. And that's going to be the best thing, is that people are understanding, okay, it's not going to be, I'm going to start something and it's going to change drastically by the time I'm getting ready to lock in a rate, which was happening quite a bit.
Right. Yeah. I mean, I think, thinking about even like the last, probably 4 years, but you're on the same page with me too, which is, I kind of feel like, 4 years ago when it was 2020 and the interest rates were in the twos, that, and it was crazy, I think, from the real estate side, because you started to see kind of two groups of buyers. You had the group of buyers that had to move because they had a job, they had, whether divorce, whatever it was, that they had to move. But we also had this new group of buyers that was like, I can afford this much house now because my interest rate is 2%.
Yes.
And so you had these people who just wanted to move. So you got the need to move, the want to move. And all of a sudden it just exploded. And I mean, interest rates make such a difference in the real estate market. And then of course, I think there were some course corrections there where all of a sudden they skyrocketed.
I would say it was like, I remember 2020, it's like you showed a house and, okay, can you decide in 30 minutes?
I know, yeah.
5 offers.
I've seen some of those fun
You
videos.
had to decide before you even listed.
You're literally running through the house.
House in this area. Where to open up? Would you want to buy it? Let's write an offer.
Before we walk in the door, I need you to understand that you need to know.
It was a
come out.
crazy market.
The interest rate slowdown last, I feel like such a breath of fresh air in 2024 compared to 2023. Once we got into the fall of 2023, I feel like there was like a national statistic that there were like the most dropped contracts in October, which I felt it. I know our agents felt it.
National.
And what a difference, even a percentage down this year. I feel like everybody has kind of calmed the waters, gotten used to it. This is just how it is. And it feels a little bit more calm than
I think that's a key point right there. Used to it, or you want to say like they've accepted that the mortgage rates are at this right now, which the entire industry now has, which has led to the customers, the clients, the public accepting it. Hey, this is what it's going to be. We also had buyers or potential buyers, this group that when it went up, they're like, I'm going to wait until it goes down. And so they waited a year or 18 months and then they see it's not. And now they are entering into purchasing because they understand, well, we waited and tried to wait and it's not happening. I don't see it. This is tough. I mean, I'm not an economist, right? I don't foresee and I don't study that every day. But the side that I do study is people, the market, how things are going, how long homes are staying on the market, whether people are getting like a HELOC or not and fixing up their home or selling it and moving into new construction or a different home. Right sizing is going on right now. We have a segment of clients or the public where they're getting a little bit older and they want like no stairs. They don't have any children anymore. They need to right size to something that fits their life right now. And they actually understood that like 24% back in like 1984 and 85 was actually a really good interest rate. Different prices, understandable, absolutely is, but from 2 to 3 to then now around 6 to 7 or somewhere in there, 5.5 to 7.25 is still very good interest rates when you look at what as a person you can actually receive a home and trying to make sure that that doesn't get overinflated, underinflated, any of those things. And we rely on our mortgage lender partners to really go over that with our clients, but then we have to also, there's continuing education. We want to go to any classes that are offered on it. We read up on it. And I'm never going to say I know where a mortgage rate is going to go, but it seems like they're going to be right around this for a little while. And that will help. It's helped with actually the inventory on the market, in my opinion, that has gone from being, like you mentioned, running through and just, we don't have time to look at that. Just here, sign it, and you never want that. You want clear understanding of what somebody's signing and what somebody's offering. But it's allowed, it's now up to what I believe the average around our area anyway is like 21, 22 days, depending on the price segment. And that gives buyers time to actually make an educated decision, which as realtors, we want to have happen. And it also, as long as you are, if you're listing a home and selling a home, as long as you price it correctly, have it presented the correct way, it's going to sell. It's just not going to sell in 1 hour or 2 hours with, hey, we'll throw in our firstborn child. Right? You don't want and that sort of thing. So I like it as a realtor that it's balanced right now, and buyers and sellers are both able to, and that's where I'm going to really prove that I'm worth the commission that I'm going to earn is my negotiation skills, my listing, package and presenting and marketing side of things. If I'm listing, if I'm helping buy, it's negotiation. Also negotiations on the list side as well. But that's where we become really good.
I think part of that negotiation too, I've noticed with the change where you went from the low interest rate to the high interest rate, a couple strategies that I've actually seen in the market too, and you can speak on it, is one is talking with clients who are selling if they have an assumable loan. And be able to advertise, that's been great. And then the second thing I've seen as a strategy is the 2-1 buy down. To be able to list that. So, we can kind of talk about those two strategies, because I think that, anyone right now who's looking to sell and they're sitting on a 2-3%,
they're like, I don't want to sell because I'm going to have to buy something at this higher interest rate. Yeah, we hear that.
Totally.
Absolutely.
Yeah, all the time. And those that are buying are like, oh man, I really missed out. I would have loved to get it. Everyone would love 2-3%, interest rate.
Hindsight's 20/20.
But there are some ways, some strategies that as you're listing and working with different clients that you can offer. I think, a lot of times too is when I've been on the buy side and I have a listing they want, I can still ask them and say, hey, do they have an assumable loan?
Yes.
Sometimes a listing agent didn't even think about it.
That's where our expertise comes in,
or the 2-1 buy down.
If we had that. Or can we do a 1031 exchange if it's an investor, or those sorts of things are where we as realtors do have to show our clients, the public, that we are worth what we are getting paid. And this is how I can help you in that. I actually have an assumable loan one just not too long ago that there's a few more hoops to jump through. Granted, yes, you have to go to the same mortgage lender that mortgage lender or that seller has currently. You have to apply the same and be approved the same way they did. There's these steps to take, but that expertise, knowing that that's available, is where, as a buyer, as a buyer's agent, if you're helping a buyer and you get that for them and you find them they are your biggest fan for life. Absolutely. Especially right now, if you can save them from 6-7% to 2.5-3%. Absolutely. And so offering those sorts of expertise is going to be
and
key.
I think for anyone listening who is like, sometimes we throw out terms and people are like, what are they talking about? So for anyone who's listening who's not sure what an assumable loan is, so you can basically assume the seller's loan. You can take over their loan, and so if they're sitting on it, a 2 or 3% loan, you're going to take over that.
Yes.
Now you do have to come with from the purchase price to whatever they're whatever they have left on their loan, you have to come with a down payment of that much.
Yeah,
that's to be able to assume that
sometimes a roadblock. But as realtors, we help them understand that. We discuss it with them. You have to bring in this much more cash, right, to the purchase. You have to make up the difference of what the original loan was versus what it's selling for now.
Correct.
Along with, but to do that, you get this huge benefit of over 30 years being from instead of 6.5 to 2. Now, it doesn't always work. It's not the perfect scenario for everybody, right? It might even be available to them, but then they look at it and they don't have that cash. Well, okay, then we explore the other options of, hey, a 6.15 interest rate.
Or then maybe they do the 2-1 buy down.
Correct.
Like we were just talking about. So the 2-1 buy down, for anyone, again, who's like, what is that?
Yeah.
That's where
mortgage lenders
you can request. Yeah, you can request for a seller to basically buy down your rate, is how that works. And so it only is for 2 years. That's where it's a 2-1. So the first year of the loan, they buy down 2% of the loan. So if it's at a 6.5 nationally, you can get it for 4.5 that first year.
Yeah.
The next year is 1 point, which is 5.5. So
and that third year
that
goes up to that.
And then but at least for 2 years, you've got a lower rate, which is great.
And then the whole hope of that is, right, to possibly refinance after those 2 years, and hopefully that the interest rates are a little bit maybe lower. They're at maybe 4.5, 5, which would be it would be great if
we would love to see it back in the fours or fives.
If anybody who even regulates that and helps, and it's starts at the top and goes down, and there's a whole bunch of people in between that have their opinions on it and get their and set those, right. If they could just listen to us realtors, please
just put it in the 5.
Listen to us realtors. That like 4.5, 4.25, 4.75, and just stay right there.
This podcast become a 5.
Your
interest rates go down.
It would allow, I believe, very balanced, where everybody, it's a win-win scenario for buyers and sellers. And ultimately, unless you are only helping one of those segments, then maybe you don't have as strong of an opinion on it, right? Or maybe you have a stronger opinion on it than you don't if you're only helping buyers. But most of us here in this area where we're located help both buyers and sellers. So I would and it depends on who I'm representing at the time, on who I'm going to fight for, right? And what my expertise is going to go towards. So I love that the mortgage industry is actually trying to help alleviate that because those 2-1 buy downs aren't offered by every mortgage lender. Some of them are offered, some of them aren't. They have different packages or different, depending on which mortgage lender you're talking to, different programs, they call it. So you do want to ask those questions. And that's also where, as a realtor, we help navigate those waters for our clients. And yeah, it's going to be a new thing to get used to again. But if we've talked about anything, this industry changes. This industry changes almost, every year. There's something new, and there'll be new tweaks, and there'll be something else, new construction, all that. So, but we go to continuing education to learn about that. We stay up on. The public doesn't have to stay up on that and be experts. We're supposed to be the experts, and then we help our clients with that expertise.
So being that I'm based out of the Lincoln area and you're in Omaha, I'm curious if you're seeing this too with the interest rates. I feel like we're in such a unique market because the higher price ranges are sitting where I have personally experienced having clients get seller credits, which I feel like or buyer credits from the seller, which I feel like was a thing of the past.
Oh, that was,
Until the last 2 years, there was no asking that. In 2020, you're like, here's this.
And no home inspection and no this. And
it's been nice. We have negotiations again, as you're mentioning. It's like nice to be able to actually feel you can negotiate more. Are you seeing in Omaha area, like the lower price regions I'm noticing here are still some of them fly off the market, and then there's some that sit. And then you've got the higher priced ones, where just unique to, maybe the house and area. It's a very interesting market because some stuff flies off the shelf. There's, 5 offers, and some stuff sits, and buyers are able to, get more than they could for sure a couple of years ago in some negotiations.
I think it's both. I mean, Omaha and Lincoln are similar in a lot of ways, but there's also then within the Omaha or within the Lincoln or within even the rural areas around, there's like sub-markets or there's micro markets in there. There's this area is you're not going to find anything in this area because no one's selling, or if you do put something on the market, there's one house on the market there. And so technically you have low inventory, right? Not very many houses on the market in this sub or micro market. And yeah, it all depends on what that price is, how the home is presented. So I just recently sold a home in the El Dorado neighborhood, 144th and Dodge Street area. And that neighborhood is unique. Most neighborhoods are until you start getting in a lot of new construction. They're having to do exactly the similar things because of building codes and such. But that neighborhood, there wasn't a whole bunch of competitive homes for sale up in there. So I had to really come up and say, well, if you listen to me and do this, 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 and this, and we price it, here's what I think it could range for. But if we price it with this strategy in mind, I think we're going to get a lot of traction. We're going to get a lot of eyeballs on it online. And then the next step is feet in the door to look at it. And the next step is written offers. They listened to me. So my clients listened to me on every single one of those steps. They did everything, which was fantastic. And turns out, listed it for that, went with the marketing strategy. And guess what? We got 5 offers. Awesome. It probably shouldn't have been, because the comps that were in the neighborhood were not getting that. They're still on the market even after ours is under contract. It sold for the offer that we did accept is above list price. So it all depends. You can even get to where if you have those outliers, right? If you have that, and those are where our expertise comes into play as well. You have to talk to your client about, this is what I'm seeing. This is what the market says your home is worth, not me. I'm not buying your home, most likely, unless it's if you're a realtor that gets into investments and stuff. But if I'm not buying your home, I'm trying to present it to this segment of the market. And this segment of the market tells me that your home is worth about this to this, and it could be this if we did these things. Okay, that's where our commissions come into play in regards to what you are paying us for.
The importance of a realtor.
Absolutely. Yeah. And we test the market, in my opinion. So even with the changes in, and let's, go back to mortgage rates, when mortgage rates did start to go up, we had to test the market, and people were putting houses still on the market for probably way too much because they were thinking that they would still get somebody, several people offering a lot of money and doing all this. And when those interest rates came up, people didn't want to take that chance anymore. They didn't want to just jump in without looking and be blind. They wanted to make an educated decision. When we test the market, well, that's exactly what I'm doing as a realtor. I'm going to help test that market. If it says we're wrong, and I've been wrong, absolutely, that's just part of life. We're human. Then we readjust. But that's where my expertise comes in too. Hey, we actually got a whole bunch of showings, right? This is an example. We got tons of showings. Everybody liked the photos and how and presented online, and the bedrooms, bathrooms, square footage, the price, the location obviously is the market wants it, because we had a lot of showings. We had no offers, right? What is it? We gather the feedback and we say, oh, yeah, that thing we did talk about, such as, and I'm just throwing something out there, that the deck is not good. Everybody commented that, yeah, I'm not willing to pay that much money for that home, and reading between the lines, if I have to replace the deck, $20,000 worth of a new deck or something to that. So then we have that discussion, and we either give credits, we talk about pricing it a little differently, we talk about having the deck replaced. We do all of those things, and then we make a decision with our clients, we implement it, and then move forward.
Yeah, I think, you know, and I think your point of talking about how the micro markets and all that kind of stuff too, it is really interesting as we've talked about the interest rates. And of course, in the real estate market, of course, they kind of go hand in hand, right? You know, because you're buyers and all that, you know, and it's constantly fluctuating. Like interest rates are constantly fluctuating. So is the real estate market. And I think that's why it's so important that you do have an agent who is actively working in the market every day, because we see those things. And that's where, you know, even though you say test, we kind of have a hypothesis.
Yes.
Of
it's an really educated test.
But
Absolutely.
We're in there and we can say, and we have those conversations and said, hey, we can try to test this with this, but I think it's going to happen, you know, and you're kind of working with them, especially in those transitions of market where, you know, it's not as steady.
And to your point, like what you said, you're mostly in Lincoln. I'm mostly in Omaha or Omaha Metro. I don't think I've had a listing in Lincoln for a long, long time. It was 5-6 years. And when I did, it was a family member, and I did it for them for a reason. If I get someone who wants to list in Lincoln, most likely I'm going to reach out to a Lincoln realtor and try and have them help them, because to your point, if they're working in that area, they're more hyper aware of what's going on.
Absolutely.
Well, that was a great discussion on interest rates and how it affects our market. And we are going to wrap up today. So, Brian, let everybody know how they can reach you if they would like to use your
Thank you for having me today.
Yeah.
My name is Brian Kays. I'm with Coldwell Banker NHS Real Estate. I am also on the Heartland Realty Group team and run that team. I can be reached at 402-740-0187.
All right. And that's a wrap. Bye.